What if I told you that everything you've been taught about trading is wrong? That charts, indicators, and strategies, the stuff you spend hours studying, will never make you consistently profitable. Most traders are losing their money right now because they ignore the mental rules that actually create the top 1% of winners. Today, I'm exposing the 3 unspoken rules that the elite traders swear by, and Rule Feint 3 will completely change the way you trade forever. Most traders spend countless hours staring at charts, indicators, and call the trading immunity the ability to withstand volatility, losses, and uncertainty without being psychologically derailed. It's a shield that allows consistent growth when combined with capital management and continuous learning. The first rule lays the foundation for everything else. Detachment ensures that you can apply the other rules effectively, because if you can't control your emotions, no strategy, no risk management, and no learning system will save you. In summary, Rule 81 is simple to state, but hard to implement. It's the psychology of detachment. It's the ability to treat losses as information, predefine and accept risk, separate ego from execution, evaluate your performance objectively, and maintain patience and long-term perspective. It's the invisible edge that allows top traders to operate calmly while others panic. It's the mental framework that ensures they don't react impulsively, chase trades emotionally, or let fear and greed dictate decisions. Mastering this rule sets you apart immediately. It gives you a professional mindset and prepares you for Rule Feint 2 on capital management, because without detachment, even perfect money management can fail. The ability to stay emotionally neutral, make rational decisions, and treat trading as a data-driven process rather than a personal battle is what keeps elite traders consistently profitable, and it's what most beginners are completely missing. This concludes Part 1, where you understand that detachment is not optional, is the core of trading mastery. It's the first mental framework that allows you to survive, adapt, and thrive in the market, while most traders lose focus and capitulate under emotional pressure. Mastering detachment gives you the ability to trade with confidence, clarity, and discipline, preparing you to implement strategic capital management. In Part 2, Rule Feint 2 for elite traders is strategic capital management and risk control, and it's what separates the top 1% from the rest, because while most traders obsess over finding the perfect setup, elite traders understand that capital preservation is the ultimate edge. If you lose your account, no strategy, no signal, and no genius chart analysis will matter. And this is why 90% of traders fail. They risk too much on each trade, they double down emotionally, they chase profits blindly, and they treat every trade over time. They don't rely on luck, they rely on structure, discipline, and risk intelligence. Even during extreme volatility, top traders remain calm because they know that their capital rules protect them. This creates what I call stress immunity. They can operate during news events, flash crashes, or unexpected swings without deviating from their plan, while retail traders panic, or freeze. Elite traders see chaos as an opportunity because that allows you to execute trades with clarity, knowing that every decision is supported by logic and structure rather than emotion and hope. This concludes Part 2, focusing on strategic capital management and risk control. The next part, Rule Feint 3, will focus on continuous learning and adaptation, and how mastering that final rule completes the framework that consistently produces top 1% trading results and sets you apart from 90% of traders who never achieve true consistency. Rule Feint 3 is perhaps the most powerful and most overlooked element of elite trading, and it is continuous learning and adaptation. Because while detachment and capital management give you control and survival, they alone cannot make you evolve in a market that is constantly changing. The top 1% understand that trading is not static. Strategies that work today can fail tomorrow, and the market itself is an ever-changing environment, which means that if you stop learning, you will plateau, stagnate, or worse, lose everything. Continuous learning is not just reading books or watching videos. It is a rigorous, systematic approach to analyzing your own performance, dissecting every trade, every decision, every win and every loss to extract actionable insights. And most traders completely ignore this because they are blinded by the illusion of knowledge and the belief that one strategy or one indicator will carry them forever. Elite traders, on the other hand, constantly review trade journals, measure execution against plan, and identify behavioral patterns that might sabotage performance. They ask themselves questions like, did I follow my rules? Did I execute without emotion? Did I manage risk according to plan? Did I take advantage of the optimal setup? And if the answer is no to any of these, they immediately adjust their approach. Continuous learning also involves testing strategies in controlled environments, small-scale simulations, or paper trading before committing real capital. This allows traders to refine systems, measure edge, and understand nuances without exposing themselves to catastrophic risk. Adaptation is the natural companion to learning because insights without application are useless. Top traders do not just collect information, they implement and adjust continuously. They evolve their strategies based on market conditions, volatility, patterns, and personal performance. They understand that what worked last year may not work today, and clinging to outdated rules is one of the fastest ways to fail. Another critical element is networking and collaboration. While most traders work in isolation, elite traders actively engage with mentors, peers, and communities of high-level traders. They exchange ideas, review setups, discuss risk, and challenge assumptions. This interaction creates perspective and accelerates learning because it exposes blind spots that solitary analysis often misses. Practical application starts with a trading journal. Every trade should include not only entry and exit details, but also the mental state, reason for taking the trade, expected risk, reward, outcome, and lessons learned. At the end of each week and month, top traders review these entries for patterns, recurring mistakes, and insights that can be turned into actionable adjustments. They also use metrics to quantify learning such as win-loss consistency, risk adherence, strategy efficiency, and emotional control. Adaptation is applied by adjusting position sizing, timing, or even strategy rules based on the evidence gathered from this review. For example, if a trader notices that certain setups consistently fail under high volatility, they modify execution rules to avoid those setups in the future. This creates a system where mistakes are not repeated and learning compounds over time. Another subtle but critical point is psychological flexibility. Elite traders are willing to admit when something is not working. They are humble in their approach, open to feedback, and capable of changing their mind based on evidence rather than ego. This is extremely rare among retail traders who often cling to losing strategies out of pride. Adaptation also includes staying aware of market trends, economic conditions, and emerging opportunities. While they do not chase every fad, they are alert to shifts that impact risk, volatility, and opportunity. They position themselves accordingly, constantly refining their edge. Continuous learning and adaptation also creates a mental resilience that allows traders to respond quickly to unexpected situations. Flash crashes, sudden spikes, or unusual market behavior do not intimidate them because they have internalized the habit of reviewing, analyzing, and adjusting. This habit forms a feedback loop where experience informs decision making. Decisions create outcomes, outcomes are analyzed, and the system evolves, creating a self-reinforcing cycle of improvement. Another key aspect is extracting lessons from wins, not just losses, because top traders know that analyzing successful trades reveals why strategies work and how to replicate success under different conditions. Many beginners only focus on losses, missing the opportunity to learn from what worked. Elite traders create playbooks of successful execution, reinforcing behaviors and decision-making patterns that lead to consistent profitability. Mental discipline is deeply intertwined with learning and adaptation, because without emotional control, reviewing trades objectively is impossible. This is why Rule 51 detachment is essential as a foundation for Rule 3. Without detachment, insights are biased by ego, frustration, or overconfidence. Continuous learning also involves setting measurable goals and key performance indicators. Top traders track not just P&L but adherence to rules, risk control, execution quality, and mental discipline. These metrics allow them to identify areas for improvement with precision and take actionable steps to refine their approach. Elite traders also cultivate curiosity. They ask why the market moved in a particular way, why a trade failed or succeeded, and they are relentless in seeking answers. This mindset of constant inquiry creates an evolving skill set that keeps them ahead of the majority of traders who stop learning once they find a single strategy. Networking also adds accountability. By discussing trades with mentors or peers, elite traders ensure that their assumptions are tested, mistakes are corrected early, and their learning is accelerated. They understand that the market is bigger than any individual ego, and survival depends on humility and adaptation. Practical exercises for viewers include reviewing trades daily, identifying one thing to improve, testing new rules on small scales, and committing to evolving strategies based on data. Every month, analyze overall performance trends and implement one adjustment to improve risk management, execution, or strategy refinement. This systematic approach ensures that learning is actionable, measurable, and continuous, and when combined with detachment and capital management from Rules 51 and 2, it creates a complete framework that elite traders use to consistently outperform 90% of the market. The key takeaway is that learning is never finished and adaptation is never optional. The market evolves, and the trader must evolve faster. Those who stop learning plateau or fail. Those who continuously learn and adapt compound their edge exponentially over time. Mastering Rule 53 allows traders to turn mistakes into growth, refine their strategy in real time, and maintain a long-term advantage over competitors who rely solely on static strategies. This rule is the final piece of the puzzle and is what transforms disciplined, detached, and capital-controlled traders into elite, consistently profitable professionals who survive and thrive in any market condition. Continuous learning and adaptation is not an abstract concept. It is a practical, actionable, repeatable system that informs every trade, decision, and strategy adjustment, and it ensures that even as the market shifts, the trader remains ahead, resilient, and prepared. With the first two rules in place, this third rule completes the framework, creating a self-reinforcing loop of detachment, disciplined capital management, and ongoing adaptation. This is the invisible edge that 90% of traders never develop, the edge that makes the top 1% consistently profitable, adaptable, and dominant in the market. Without continuous learning and adaptation, even detachment and risk control are incomplete. They must evolve together to create a mindset capable of consistently extracting opportunity, mitigating loss, and compounding skill. When this rule is fully embraced, the trader becomes a lifelong student of the market, constantly analyzing, adjusting, and improving, ensuring survival, growth, and elite performance over the long term. Now that we've covered detachment, capital management, and continuous learning, it's time to integrate all three rules and understand what it truly means to operate beyond the charts, because most traders still believe success comes solely from patterns, indicators, or signals, and while these tools are helpful, they are only the surface layer. The real edge lies in combining psychological control, disciplined capital allocation, and constant adaptation into a single cohesive framework that guides every trade. Beyond the charts means that you no longer react to the market blindly, you no longer chase setups, or get emotionally involved in every price move. Instead, you operate from a position of calm authority and strategic clarity. You see every opportunity objectively, evaluate risk and reward logically, and execute according to rules you have built over time. Integrating the three unspoken rules creates a systematic advantage. Detachment ensures that emotion never overrides logic. Capital management ensures that your account survives and grows steadily, and continuous learning ensures that your system evolves as the market changes. The first step in integrating these rules is to create a structured trading routine that incorporates all three principles. For example, begin each trading day by reviewing your rules for emotional control, define the trades you will consider, predefine risk for each position, and visualize acceptance of potential losses. This sets your mental foundation. Next, before entering any trade, determine position size according to portfolio risk parameters and the opportunity's probability. This ensures that your capital is protected and every risk is intentional rather than accidental. As you execute trades, constantly monitor your adherence to both emotional and risk rules. If you notice a deviation, pause and reassess rather than forcing trades. This discipline maintains system integrity. After each trade, immediately log results including execution, mental state, and outcome. This journaling is essential because without capturing and analyzing data, learning cannot occur. Review trades daily, weekly, and monthly to identify patterns, mistakes, and successes, adjusting rules, position sizing, and strategy as necessary. This is where continuous learning and adaptation fully come into play. Integration also requires mental rehearsal of scenarios. Top traders anticipate unexpected market events and mentally simulate how they will respond while remaining detached and risk-aware. This preparation allows for rapid adaptation without panic during real market conditions. Beyond the charts also means adopting a long-term perspective. Trades are not judged individually by profit or loss, but by how they fit into a consistent, disciplined system that grows over time. Short-term setbacks are analyzed objectively and treated as data for improvement rather than personal failure. Another key aspect is avoiding over-optimization. Many traders obsess over finding perfect entries, adjusting indicators, or chasing minor market details. Top traders know that execution and discipline matter far more than chasing perfection. They focus on following their rules consistently and letting the market do its work. This mindset reduces stress, prevents overtrading, and maximizes long-term profitability. Integration also involves strategic flexibility. While rules guide every decision, top traders are adaptable within the framework. For example, if volatility spikes or market conditions change, they adjust position sizing, entry, or exit strategies without violating risk limits or detachment principles. This allows them to capitalize on opportunities others avoid due to rigidity or fear. Practical implementation for viewers includes creating a daily checklist, review emotional rules, define trades and risk, execute according to plan, log results, and reflect on lessons learned. Repeating this routine consistently embeds the principles into behavior so that following them becomes automatic. Another important layer is mindset reinforcement. Remind yourself before and during trading that charts and indicators are tools, not the edge. The edge is in your psychology, capital, and adaptability. Repeating this daily strengthens discipline and confidence over time. Beyond the charts also encourages strategic observation. Top traders watch the market to gather information without reacting emotionally. They look for patterns, anomalies, and setups that fit their criteria rather than chasing every move. This observational skill, combined with detachment, risk control, and learning, creates a powerful advantage that most retail traders never develop. Integration also includes feedback loops. After a period of consistent trading, review both successes and failures to adjust rules, improve position sizing, and refine emotional control strategies. This iterative improvement compounds over time, creating an elite system of execution that evolves as you evolve. One of the most overlooked aspects of going beyond the charts is community and mentorship. While the average trader trades in isolation, elite traders engage with peers, mentors, and professionals to validate assumptions, learn faster, and gain perspective. Feedback from experienced traders accelerates learning and prevents costly mistakes that could take months to discover alone. Another component is stress management and mental health. Integrating all three rules reduces emotional fatigue, prevents impulsive trades, and maintains clarity under pressure. By consistently applying detachment, risk discipline, and adaptation, traders can operate at peak performance even during high-stress conditions. Finally, the full integration creates predictable, repeatable, and scalable performance. It allows traders to trade with confidence, protect capital, learn continuously, and evolve strategies over time. This combined framework is what allows the top 1% to outperform 90% of traders, survive volatility, and compound skill and wealth consistently. Without this integration, individual rules may help partially, but performance will be inconsistent and vulnerable to emotional mistakes, poor risk decisions, and stagnation. The ultimate takeaway is that trading beyond the charts is about becoming a complete system, a system that blends emotional mastery, disciplined capital management, and continuous improvement into a single coherent approach. By internalizing these rules, practicing them consistently, and applying them in real market conditions, traders gain a sustainable edge, operate confidently in all conditions, and consistently grow both skill and capital. Remember that charts, indicators, and setups are only the surface. The true edge lies in your mind, your rules, and your ability to adapt. Mastering this integration ensures that you are not just reacting to the market, but controlling your performance within it, creating a professional, elite, and unstoppable trading mindset that elevates you above the majority of traders who remain stuck chasing signals, making impulsive decisions, and ignoring the invisible rules that actually determine success. This concludes Part 4 and sets the stage for Part 5, where we will explore practical next steps, actionable routines, and how to take these principles and transform your trading from ordinary to elite, integrating all the rules into a system that produces measurable results, long-term growth, and professional-level consistency. Now that you understand the three unspoken rules of elite traders, detachment, strategic capital management, and continuous learning and adaptation, it's time to put everything together and take your trading to a professional, elite level. Part 5 is all about integrating these principles into a real-world routine and taking action, because knowledge alone without execution is useless. The first step in mastery is daily discipline. Before you even open a chart, remind yourself of Rule 81, emotional detachment. Acknowledge that every trade has a risk and every loss is data, not a failure. Set mental boundaries, define your risk tolerance, and accept the possibility of loss. This mental preparation will keep your decisions logical and calm. Next, implement Rule 82 by defining position sizes and capital allocation for the day. Decide how much you are willing to risk per trade, which trades are high confidence, which are exploratory, and how to diversify exposure across opportunities to minimize catastrophic risk. Every decision about capital should be deliberate, structured, and unemotional. Then apply Rule 83, continuous learning and adaptation, by reviewing prior trades, journaling outcomes, and identifying patterns, mistakes, and lessons. Adjust strategies based on this insight and continuously improve execution. This creates a feedback loop that compounds your skill over time. The integration of all three rules creates a trading system that operates beyond charts, allowing you to respond to the market with clarity, confidence, and strategic precision. This is what separates the top 1% from the 99% who react emotionally, overtrade, or stagnate. Elite trading is not about finding the perfect chart pattern or chasing indicators. It's about creating a personalized, disciplined, and evolving system that fits your psychology, capital, and learning style. Consistency comes from executing this system repeatedly, not from luck or guessing. Practical next steps include, before each trading session, review your emotional rules, set risk parameters, select trades according to predefined criteria, execute according to plan, log results immediately, and review patterns weekly and monthly to adjust strategies. Incorporate lessons from both wins and losses, stay humble, curious, and open to feedback, and remember that market conditions are always changing, so your system must evolve alongside them. Another key element is reflection. At the end of each week or month, assess not just profitability but adherence to rules, emotional control, risk discipline, and learning progress. This meta-review ensures that your system improves continuously. Viewers, the most important takeaway is that success in trading is invisible, psychological, and strategic, not visible on charts or flashy indicators. If you want to rise above 90% of traders, you must internalize these principles, practice them consistently, and make them the foundation of every trade you take. As a final action, I want you to implement one rule immediately. Write down your daily risk limit, accept the possibility of loss emotionally, execute one trade with perfect discipline, log it, and reflect on the outcome. This simple exercise begins the journey of transforming ordinary trading into elite, consistent performance. Remember, mastery is a process, not an event. By combining detachment, capital management, and continuous learning into a single integrated system, you create the invisible edge, survive market volatility, compound skill and wealth, and position yourself as a professional trader operating beyond the charts. Comment below with which of these rules you will apply first, share your experience, and engage with other traders to accelerate your growth. This concludes Part 5 and completes the full framework of the top 1% trading mindset. Now it's up to you to act, integrate, and evolve to join the ranks of elite traders who dominate the market while others remain trapped in reactive, emotional, and inconsistent trading patterns.